Hello traders, Gary Wagner here. Just after 1 o'clock in Honolulu, 7 o'clock in New York. It is Friday. Happy Aloha Friday, as we say on the islands. August the 6th, 2021, and this is the daily report for gold and silver, our weekend review. And we had a bombshell dropped, a good bombshell when we consider that the economy is rebounding and more people are going to work, and a real bombshell for gold bulls that were hoping that gold would rise with an underestimate in the forecast for last month's jobs report. Of course, that didn't happen. We'll speak to that in our opening letter and talk about where we're looking for gold to go in the future, but most importantly, whether or not gold and silver sustained any technical chart damage in trading today. We'll do that now. The show begins. Traders, it was an absolutely brutal day for both gold and silver, with both precious metals trading off by 2.5% in gold and 3.8% in silver. Gold opened just above the 100-day moving average today, and that was short-lived. As you can see, it sold off briskly once the U.S. Labor Department released its non-farm payrolls report. The estimation was a little bit over 800,000. The actual numbers were 900,000. That propelled this market down about $43 past the 61.8% retracement. That is at 1769. And as of current, we are looking at gold trading at 1763.50, a net decline of $45.40. That did affect our trade. We got in at 1812. We got out at 1789 for a loss on the day. Unquestionably, both gold and silver did sustain technical chart damage. We'll look at that when we pull up some charts. The Labor Department's jobs report, which came in well above expectation, sent ripples through the financial market. First, it was highly supportive of the U.S. dollar. That gained almost 0.6%, up 0.533 points, and is currently printing at 92.78.5. At the same time, we saw yields in U.S. 10-year notes also tick up. And those collectively really added to the selling pressure that we saw in gold today. When we take a look at the respective highs and lows of gold today, what we can see is that it traded to a low of 1763.50 and a high of 1806. Actually, that was the open. The high was 1807. So the question becomes, did gold sustain any major technical chart damage? The simple answer is yes. The reason that I am saying that is we were already trading well below the 50 and 200-day moving average. We had broken below the 38.2% fib retracement at 1815. The market opened just above the 100-day moving average, but not only fell below that particular price point, but also traded and closed well below the 23.6% Fibonacci retracement at 1790. What is most alarming is that we are very, very close to the beginning of where we are pegging the bottom of this correction, which comes in right here. Realize the data set we are using is a short data set, really running from 1920 all the way down to these lows that come in at 1750. For us to have any model that is looking for gold to continue in some sort of a bullish rally, after a correction, it needs to come in and actually make a higher high than the previous high. And if it negates or comes below the lows here, then that Elliott wave count certainly cannot be construed as a bullish count. If anything, it might be indicating the switch from a bull count to a bear count. And we would know that if we broke below 1750. We will maintain our neutral stance. We do want to let the dust settle and see where this market wants to go. certainly cannot be construed as a bullish count. If anything, it might be indicating the switch from a bull count to a bear count. And we would know that if we broke below 1750. We will maintain our neutral stance. We do want to let the dust settle and see where this market wants to go. Certainly cannot be construed as a bullish count. If anything, it might be indicating the switch from a bull count to a bear count. And we would know that if we broke below 1750. We will maintain our neutral stance. We do want to let the dust settle and see where this market wants to go. This is me, Gary Wagner, wishing you, as always, good trading. We will talk to you on Monday for the next daily update and review. Bye-bye.